Just how bad is sentiment toward the U.S. tech sector right now? How does it compare to when the dot-com bubble burst, for example?
Well, I think Bill Gurley put it pretty rightly so on Twitter a couple of weeks ago. It's probably the worst sentiment we have had since 2001. The mood is very dark, and it's natural. Tighter financial conditions. We have the tightest financial conditions relative to the economic backdrop since the pandemic. We are in a financial conditions territory we typically only see when we have crisis. So the pandemic, the euro area crisis, the 2008 crisis, 2001 dot-com burst, 1998 Southeast Asia crisis. So that's the typical environment, or that's the environment we're in right now. So the mood is very dark, and these high interest rates are forcing the technology sector to become profitable much faster. So if you went back just 1 year ago, you probably had 5 or 6 years in your business model to break even, and now you're probably being forced to do it in 2 or 3 years. So that's the dynamic that is happening out there, and it's moving very fast.
So what do you do from a strategy perspective? Clearly, when things are approaching rock bottom, that's when you typically want to start thinking about buying in. Is that where we are right now? And how do you think about the subsectors within technology? It sounds like there are parts of the tech sector you want to be avoiding right now, but perhaps parts that you want to be seizing.
So you have to start by having the right building blocks in the world we are facing over the next 8 to 9, 10 years. And that is, we have hit a physical limit. And the physical limit is coming from underinvestment, urbanization, the green transformation, deglobalization. So you need to have investments in the commodities sector. You need to be overweight in cybersecurity, defense, logistics, renewable energy, and India. And then outside that, you still need the building blocks of high growth. And the technology sector is still interesting long-term because it's the sector that can generate long-term the most profits from the least raw input from commodities. But just like during the dot-com, we will have a lot of blood on the street. There will be casualties, but out of these casualties, there will be long-term winners, just like Microsoft, Amazon, Qualcomm, Intel, AMD took big losses in the dot-com burst. There are still long-term winners, and we'll have the exact same dynamic, we think, and cycle. But this time around, we really recommend people to watch inside the technology sector for semiconductors long-term because of its necessity for driving the digitalization, and then look for software companies. And we have a tilt right now in the short term towards the mega caps because they have monopolies and pricing power. But we're getting to territories now where some of the smaller technology companies, if you do the due diligence and look at the business models, there will be some quite attractive risk-reward ratios in these smaller cap technology companies.